What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SOFI stock. And we know that the SOFI stock, along with, hundreds of other small caps, have been in a rough environment the past 3 years because of that higher inflation, those rate hikes, and just, bad CPI report after report after report. But it looks like finally we are getting a tick down in inflation, guys. The CPI report turned negative. This is the first time since COVID pandemic. So it was absolutely insane news. We just got, good news with the labor market softening, just a day or two ago. And today was the moment of truth when that CPI report came out, because we know Jerome Powell was already getting concerned about, when he has to do these rate cuts. And guys, we got some great news, guys, with that negative CPI report. So that's on top of each other. And if you see the percentage of a chance of a rate in September, guys, it is through the moon right now. We're going to be taking a look at that. So as long as we get one more, solid CPI report, 30 days from now, things are going to be looking really good. And we saw a really good bounce in small caps, which you haven't seen in, years. It's just been in a pretty much stuck in the charts. This is exactly what the CEO, Anthony Noto, was talking about just, a day ago about, how rate cuts are really going to help their business in the back half of 2024, just allowing them to, lend further and harder because they have built up that nice capital ratio to go out there and, just produce growth. Okay, we want to see revenue growth across the board, not only in lending but financial services and technology platform as well. And he said 2025, that is going to be the year where you see SoFi hit on all those sectors once again, just like they did in 2023, except you're going to see a re-acceleration in Galileo in 2025. So if you find any of this information useful, be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated daily on all the breaking news. Let's get into the video. All right, guys, just a day ago, we got some good news. As you can see in the headlines, look, U.S. economy no longer overheated. Fed's Powell tells Congress. That's about the labor market softening. And then we got the big CPI report today, guys. Take a look. Inflation falls 0.1% in June from prior month, helping the case for lower rates. And take a look at what it did to the projection of rate cuts. You can see here now the Fed funds futures now see an 88.8% chance of at least one rate cut by September, guys. The CEO, Anthony Noto, made a huge pivot, going from 4 to 6 rate cuts back down to 1 to 2 rate cuts. And geez, SoFi management hit the nail on the head, guys. Called the money call. That's just going to lead them to have great success going into 2025. Just stronger growth, pulling back on lending when people are feeling the pressure from these higher rates. And just, they did the right thing, guys. And it's really going to pay off for the stock when we get some rate cuts, potentially in the little as 60 days. And look what it did to the overall market. Everyone's been concerned because the market has just been rallying and rallying. Mega caps, we don't even call it the S&P 500. We call it the S&P 6, just the MAGA 6. Those are the only stocks that were really running and propping up the entire market. And as soon as you got that good CPI report, you would have thought the stock market would have mooned even higher. But look, guys, it pulled back almost 2%. That's because you have that MAGA 6 running so hot, along with semiconductor and AI stocks, guys. That's what was propping the market up, the past 2 years. And look at the move that the IWM Russell 2000 ETF had, 3.59% move, guys. This is an insane move on an index, okay? If you just look at the 6-month chart, plus 8%, 1-month chart, 5%, year to date, 5%, just absolutely nothing, the past year on the Russell 2000, okay? You've seen the S&P 500, NASDAQ go up 70, 80%. Guys, this thing could run for literally a year and a half, because mega caps have been, running so hot. All those valuations are so high, 30 to 50 PE multiples on stocks that are growing 5% growth, okay? It just doesn't make sense. It was the institutions playing it very safe, just going for those larger, durable legacy companies. And guys, I think you're going to see a massive rotation, okay? I believe SoFi is going to be a big winner, but hey, this is a chance to diversify your portfolio as well. There's going to be a lot of winners over the next, 18 to 24 months in a lower interest rate environment, like you saw back early in 2020 when, so many SPAC stocks and unprofitable names were just rallying, okay? Now's the time to pick small caps that are profitable, like a SoFi, guys. Literally, guys, SoFi is 2 quarters away and having a $14 to $16 stock price from entering the S&P 500, being, ready to get accepted, okay? They just need a 15 billion market cap and 4 profitable quarters, and you're going to be up for grabs, okay? If SoFi does some crazy thing, signs over some legacy institutions to their Galileo platform, guys, we could be in the S&P 500 by the back end of 2025. It is definitely a possibility. We just need to knock out these next 2 profitable quarters, and we're going to be good to go. Guys, take a look, guys. This is just a list of these semiconductor stocks, the ones that have been running hot. Pretty much all of these have been moving the exact same, besides Nvidia that's got the crazy move, like a 10x the past, year and a half, and all these other ones, 200 to 400% moves. Look at the moves today on the downside. ARM, Lam, Nvidia, Micron. I mean, look at these moves, guys. 4, 5, 6% declines, okay? Technology, AI, and semiconductors have been running hot for 2+ years, okay? We need a sector rotation because those stocks are just too crazy valuations where institutions have just pumped so much money into them. Small caps is where you want to be right now for the next 2 years. Taking a look at SoFi, guys, we can see we had a big pop this morning. I believe we hit about 5% gain. Finished a little bit of sell, but we had a nice bounce at the end of the day, plus 3% green today. And guys, I'm telling you, these shorts have still not gone anywhere, okay? They probably increased their short interest today, okay? These shorts have not given up. I'm telling you right now, their hand is inside of the cookie jar, and these guys are 19% short on the SoFi stock, and we have a massive opportunity to squeeze these guys to insane levels, new all-time highs. When you got the Q2 earnings coming up and you also have rate cuts potentially in the next 60 days, I believe these guys are going to push it to the last limit that they can to just, try to hold the stock down. And I think they're going to get a little bit too greedy and potentially get squeezed. Now, we're always looking at the options just to see what's going on with the SoFi stock, okay? We got the next upcoming weeks. You can see ending Friday, we got about 92,000 calls outstanding. And next week, that's that big one I continue to talk about, July 19th. 282,000 calls. I'm sure we could move up a little bit next week, but they're not going to let this stock absolutely moon with this many calls outstanding right now, guys. But I'm telling you, once we get past these calls, I think we can see some upside heading into earnings for the next about 10 to 11 days, about the 30th. As you can see, the next, 3 weeks, pretty low open interest on the calls. This is the big week next Friday. So don't be playing any short, outdated calls in the next, 1 to 2 weeks. I just don't see us, getting a crazy rip with 282,000 calls outstanding. So be careful on those July 19th. Just watch it. I'm ready for these to expire, and we could get some good uptrend in the back half of the year with some rate cuts. Guys, if you look at the overall market, you got 138 growth stocks or overall stocks we're watching. You can see Tesla finished the worst of the day, down 8.4% because they moved their date a little bit back 2 months. But you guys can see there was a lot of other growth stocks red, okay? We got 4%, 3%, 2%, 1%, a lot of red inside of the market today. But if we just go, to the higher end and just see what type of stocks are moving, SoFi finished in the top 40. I wish I would have liked to see it, maybe a plus 4% to the top 20, 25. But if we just go to the top, guys, we can see a lot of these smaller caps are running. Still some unprofitable names. STEM, you can see, had a great day, 11%. But, guys, the STEM stock's down to $1. Redfin ran a little bit. You got real estate mortgages plus 9. Upstart, that's a big one that, I said definitely could do well, 8.4%. I mean, this is the type of move we really want to see in the next, upcoming week or so. A nice 8% move on the SoFi stock would be absolutely insane. And then you also saw Lending Club move up 7.8%. So these are the types of moves that we want to see these shorts get squeezed on just in a nice little day for SoFi. We got the 3% move, but we want to see a 7 to 8% move like an Upstart or Lending Club. And it could potentially happen in the next, couple of weeks. It's just a matter of time before the shorts give up. And guys, we're always talking about PE ratios, how right now some people classify SoFi going off PE ratio, but these earlier growth stocks that are just flipping to profitability, it's not really a great metric to list the stock at, a PE ratio, because it's such in the early stages of growth. They're not seeing that crazy, bottom line drop and consistency like with a 20% growth. But guys, take a look at the PE ratio on Tesla just to show you exactly what happens when a company does flip to profitability. We know that Tesla hit full year profitability in 2020, and this is where you see that PE ratio explode. Look at that, guys. 1,200, but once they get that consistent year-over-year profitability, it continues to drop down, okay? You saw 2021, it went to 300, 2022, 34x, and then right now we're back at about 70x. So as you can see, the first 2 years is where you see that PE ratio just go absolutely bananas, okay? I'm not saying we're going to be at a 1,200 or a 300, but imagine if we get to like a 4 P ratio of like 100, let's say for 2024 this year, okay? So guys, this would be equivalent to 13 times less than what Tesla stock did in its first year of profitability when it jumped up to a 1300 P ratio. Let's say we go to 4 P ratio of 100. You're looking at about a $17 stock, okay? If we get that crazy PE push, on profitability, and then it gradually comes down the next 2 to 3 years to a 50, to a 30, something more fintech related. So this is exactly what happens on the first, couple of years of profitability. So don't be watching PE ratio too much. All right, guys, there you have it. The market today was really liking it for small caps because we got a lower negative CPI report. We haven't had that in literally like 3 to 4 years since the COVID pandemic, guys. So this is an opportunity to see a market shift into the small cap names, but it's not time to be chasing unprofitable, small caps. You want to be chasing tough, durable small caps like a SoFi. Remember, guys, SoFi is 2 quarters away from, 4 quarters in a row of profitability, and to get that 15 billion market cap, about $15 stock, you're looking at SP 500 inclusion maybe in the back half of 2024. If we see some big things happen, with some legacy companies, they could literally slip in the next 6 quarters or so. Okay, so all we got to do is continue exactly what we're doing, guys. Growth and profitability, and that's exactly what SoFi management is doing. And guys, once again, the CEO hit the nail on the head, cutting back their guidance from 4 to 6 rate cuts down to 1 or 2, guys. This is really going to pay off in the back half of the next, year and a half. And we're going to see some great returns in the SoFi stock. And I think they're going to increase guidance once again in this next upcoming earnings. Once again, my name is Kyle. Hope you have a great day.